Hello and welcome to today's silver chart analysis for the date of the 19th day of January 2017. My name's Derek and welcome. Let's take a look at the daily and weekly time frames. This high now is technically higher, 6 cents higher. So in my book, it's a matching high. It's a step further, you could state. The next step is going to be making a higher low from this level, which it's favored to. Whenever it doesn't make a lower high, I have to think that it's probably going to make a higher low. And in that situation, it to me almost becomes wild card. And not only because it would be within this 18 average band, although it would be showing what the case would be in neutral, but if it were to come down to an area like this, and then as a bookmaker, or if I were to just guess probability odds, what's more likely, a break of this level by at least a dime or a break of this level by, again, at least a dime? And that's where the game would be difficult in trying to predict such. And that's why if any type of higher low comes in, that would complete what would look like an inverted head and shoulders pattern. That's a very common pattern to say the least, but the overall key thing I look at this as, this is a key resistance point. It's already sold off 3% from peaking at this point. So that's already a correction in price. So whether it bottoms here or however long it takes, the break of resistance is what is needed on the bullish level. As I've been stating, it's got to do something about these lower highs. Well, it's technically done something about this, but that's going to make the next lower high resistance field in at 19 with, of course, several other areas that would be resistance along the way in the shorter term time frame. So that's the bullishness that I'm looking for. So whether there's an inverted head and shoulders pattern, which means it retraces a bit lower, whether it bottoms here and it just keeps the grinding trend higher, it doesn't matter, but I'm looking for that break. And on the contrary, as I've been mentioning within this move, it's looking like the possibility, if it fails to the downside and it holds the 18 or doesn't hold the 18 average and breaks below it, then would look like a big failed breakout, bigger than even this. Or maybe, even in this one here, you can see when it broke down below the band, it didn't do so well. However, if it never does go below there, when you look at the chart, you would say, well, why would you think it was going to do that? It obviously kept going higher. And that's why, of course, you're waiting for momentum and probability odds to work within your favor. That's one of the measures I'm looking within it. On the weekly time frame, a move right up to the 18 average of lows that has been declining. Its status since, in here you had the support in the bull market lifted off and had a big gain. And then the support test ultimately didn't hold. Thus, a break below here, a big red candle. And since that point, resistance between the 18 average of highs and closes and a quick sharp sell-off. In this case, resistance on the 18 average of lows and a decent size sharp sell-off. And now we've had 3 okay green candles in a row. So when I look at just this last candle, a situation where it closes relatively near where it opened, but it had a significant gain, a pattern like this. In itself, you could say that's a very bearish sentiment, but I asked myself, where did it come from? How has it been? And in a situation where it comes from this bottom, well, if it makes a move from well below the 18 average of lows all the way up to the 18 average of highs, it's due for some sort of retracement. And if it goes to the highs, I would hope on a bullish level, it's either the 18 average of closes where it's at or the 18 average of lows, a little bit more retracement. That's what you'd be looking for, because staying within this band neutralizes the market. So it's barely neutral, or it's a bearish in a correctionary phase now would be another way of putting it. And just like I said in the daily time frame, if this thing breaks out, it will look good here too. And that a move would bring it up to attempt to put this into a bull market. Other previous times when it is attempted such, we can see in here, it attempted it on the break of this point here. established resistance, but along the way, it went sideways and ultimately the attempt failed. Then you had this attempt breaking above the 18 average of highs again, but it resisted in here, had no support, but really not much of a plunge from this point down. And then there was this one here. This attempt succeeded because it ultimately had a gain from the 15 mark all the way up to 21. So that was a successful move. And that's what the whole thing is. The next time it has a serious break above the 18 average of highs, whatever number that happens to be, will be the next attempt to put this into a bull market. Alrighty, take care. Have yourself a great day. Bye-bye.